I'll talk about it in two senses. And the first way is in terms of the vehicles and the strategies and what we actually try to offer to clients. We try to be a facilitator. We basically want to allow clients to invest in anywhere they want. And obviously a big strength of the firm is the custody network. I believe we're in something like 120 plus countries. So we're able to offer local custody, be able to trade locally. And we also, particularly within my group, we try to build custom products. We try to build custom investment universes, or we allow clients to, for example, take some countries out and put other countries in, and build very custom strategies based on their preferences. And so in those two ways, we want to be really facilitators for the clients to invest in places like Africa. Now then, of course, there's the investment approach, and we look at, obviously, things like valuation. Many traditional factors, especially quantitative factors, are simply not available, but some basic valuation numbers are always available. And we obviously consider things like governance, transparency in the markets, how timely companies are with reporting their financials, the investment environment, things like ease of inflows and outflows, capital requirements, foreign ownership limits. Liquidity is obviously important. And we understand that frontier markets are different from the emerging markets in that sense, so we've tried to structure things and also educate clients appropriately as to the need for tighter restrictions on the funds, things like when the fund opens, things like need for longer notice periods, and so forth. So we've tried to manage their expectations for liquidity. And obviously client preferences are very important, risk appetite. And when I talk about client preferences, it also goes back to having the flexibility to offer custom solutions or access to custom universes. And one other thing is ESG, SRI. I throw around a lot of acronyms, so I should say what those are in case people don't know. Environmental, social, and governance, and then socially responsible investment are becoming much more popular in emerging market investing. So I have a feeling we're not doing a lot at the moment, but I have a feeling we'll definitely be doing more as we go forward. And I just wanted to end with on Don's point about the investment opportunity. I thought everyone had heard this story, but I told it 2 weeks ago, and I got a good response. So an economist is walking down the street, looks down, sees a $20 bill on the ground, and keeps walking, walks right past it. A person's coming in the opposite direction, sees what just happened, and asks him, he says, "Why didn't you pick that up?" He says, "Well, somebody would have already picked it up. It can't possibly exist." And that story is usually used to poke fun at the idea of efficient markets, but I think it also applies here. I think lots of investors will overlook Africa until it becomes extremely obvious. So it's definitely a long-term proposition.
What do your investor base think about currency risk? Do they accept it as part of the investment, or do they force you to manage it or hedge it somehow? Thanks.
Yes, no, or we don't know, and if yes or no, a one-sentence answer, why or why not. Chris, go ahead.
So I think the answer is no. They don't care. No is they don't care.
Okay.
I would generally say no.
Doing business in Africa. You can't afford to be without Africa Investor.